The fixed income market has seen improved liquidity with the sale of 30 billion naira at Omo auction. Traders at Access Bank say that they expect rates to increase ahead of today's bi-weekly retail SMIS auction. And I have Bukky Aregbesola, the head of fixed income at Access Bank. She joins me now as we look at what's driving sentiment in the fixed income market this week. Thank you so much for your time today, Bukky. And let's first look at what we're seeing play out in terms of market activity this week.
Okay, so opening the day, we had CBN conducting CRR debates across the industry, and this has essentially reduced liquidity in the money market. And the response to this, rates have gone up in the money market, and this has essentially dovetailed into the fixed income markets as well. We've seen the markets open on a very quiet note, and yields are gradually trending up. We expect that this would flow into the next week, and then we'll probably see significant increase in rates across board.
Right, but when you look at the liquidity situation, what's your outlook for the month of March? And also on the FX side, I'm trying to understand the dynamics at play at the investor and exporters window.
For the month of March, in terms of liquidity, we expect that it would generally remain stable, except we see significant debits of CRR by the CBN. And this is because we anticipate a couple of bond coupon payments into the system of about 200 billion this month. So this should help, in calming down or in improving liquidity in the market, essentially. We also expect that for all of the OMO maturities that we're going to have, CBN is not going to be selling as much, which is what the trend has been. So we anticipate that liquidity should remain around the same levels we've seen since the beginning of the year. And for FX, we continue to see lack of supply in the I&E market. We expect this to continue, even as CBN is still working on getting exporters to begin to bring in more funds into the country. But we know that initiative is going to take some time, so we don't expect to see any impact in the short term.
But how is the market pricing in the external development? We're seeing crude prices rise as well, also developments in Ukraine.
So despite the increase in prices of crude oil in the international markets, we haven't seen the impact in the local markets, and so far, and demand still continues to outweigh supply. I expect that any impact from the crude oil price increases in the international markets would be something we'll see in the long term, but not in the short term. So as we speak, we still continue to see the same sentiments play out in the I&E market, where buyers continue to demand for FX, and the supply still remains thin.
All right, finally, on the still on the external developments here, we've seen we've been anticipating the rate hikes from the U.S. Fed, also the Bank of England, as also the Bank of Canada as well. I've also shown they also plan to follow in that order as well. How do you also anticipate this will play out in the market?
For our local markets, the experience has been that irrespective of everything happening in the global market space, we are not seeing that impact in the local market. What our market has been responding to is just the liquidity in the system at the moment. And this is essentially because in terms of investment outlets in the local market, yields continue to remain at very low levels, and there's quite a bit of money chasing, the available offerings in the market. So at the moment, all we've been seeing is impacts on of liquidity on the yields. The activities in the global market is not exactly playing out in the local market, except maybe on the Eurobond side, where we've seen an increase in demand for those assets. So we are having some retail investors, playing more in the Eurobond market space.